right, what's up, everyone? Let's go ahead and do today's breakdown. So, EU is pretty simple around London, right? It was just a very simple daily cycle play. Pretty much what I saw for the most part as we came to mitigate these wicks right here, right? And then right after we mitigated these wicks here, what else do we have? We go into the 10-minute and or the 5-minute, right? You can see at this 5-minute, if we were to enter at first here, we would have hit SL. However, if we were to grab this position right here, which would be the safer position, right, we would have not hit SL. Now, how do we know to avoid, I'm on the 4-minute, my fault. How do we know, either way, it's still the same thing. How do we know to avoid this, right? Well, we didn't come and mitigate anything from the past. I think I failed to tell you guys that. I kind of assumed that you guys were already doing that, but I always check to see if we mitigate something from the past. That doesn't mean I'm instant entering, right? I never really instant order anything really anymore, only because I find that people get stopped out here quite a lot, right? That's why I always say wait for confirmation, right? So as you can see, here's some confirmation, right? And on here, here's the same thing. Here's some confirmation. If we go into the 10-minute as well, say that we missed anything here and we want to only trade the 10-minute. Well, after post mitigation here, we still have this bearish engulfing, right? Which still allows us to take these entries here based off of like the normal strategy that I show most of you. All right, that's still like a 4-pip SL, right? We want to aim for our structural target. So here, 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 right? So that'd be 1, 2, 3, and we're looking at around at max 1 to 5, right? Now, can we get cleaner refinements out of this? Sure, right? If we go into the 3-minute per se, what can we understand structurally? Well, let's just go into the 1-minute. One of ICT's concepts, right? Structurally, we want to see a sweep, right, into like a high time frame sweep, right, lower time frame sweep, right, and then some sort of confirmation here. Well, if we want to get super specific and see where the actual move was supposed to occur, right, what I saw was a huge imbalance come and break all of this traffic right here, right? So because we broke all this traffic right here, this became the breaker, right? And this is actually where price started to reject off of, right? Because we had a nice imbalance cut right through that, and a nice imbalance come right back to the imbalance and supply over here, right? So that's what caused these sells to happen. I wasn't awake during this time. I wasn't trading London, but that would have significantly improved your RR if that's what you were looking for. But just simply enough, yeah, you could have just stuck to the 10-minute like normal. Anyways, we know that this is internal structure. So people are asking me a ton of questions. What is external versus internal, right? Everything here is pretty much internal, except for these highs, right? And these lows down here. Why? Generally, the highs of the day, right? If the highs of the day have swept previous day highs, right? Then coming into London, right, we can assume that if we sweep today's highs, which today's highs have swept previous day highs, right, that this is now external liquidity, right? It kind of comes with just a constant understanding how we move day by day, right? So let's pretend, right, this is why I have my session breaks, that we moved into the next day, right? And these were our previous day highs, these were our previous day lows. The previous day highs and lows generally act as external liquidity. So if you truly just wanted to play the highest probability moves, just wait for the previous day highs to get swept or the previous day lows to get swept, right? And look for the reversals. Now, is it always going to reverse? No, I've seen it happen plenty of times where we've broken previous day lows or highs and, have made continuations. But in terms of a probability standpoint, right, it's safer to assume the reversal, right? It's a lot safer to assume the reversal versus the continuation. I think a lot of you guys think there's like a perfect way to trade, right? So you'll see a setup and you'll be like, wow, this is going to be great. I'm going to make a lot of money. But in reality, I mean, you're gonna lose, right? Like I've told many of you guys before, like don't expect more than a 70% win rate, especially with the RR that we're achieving, right? So out of the 10 trades that you take, you should be winning, 7 of them. That's if you're taking high probability trades, right? Because the way that you win in this game is truly by risk to reward, right? Even if that's like a 1 to 3, 1 to 5, right? But coming in here, right, we know that this is internal, right? It's pretty clear that's internal because it's in between these two extremes here, the extreme points, right? And this is clearly internal of that, right? So when we sweep this area here, it's the same exact thing that I've been showing you guys, right? Here's the candle that broke it. Here's the candle that caused it. Where was the last sweep? The last sweep was right here, right? Which makes me assume that these are where my stops are, right above this candle here. Since this was the candle that broke it, I want to take the wick of it, right? So that would allow me to get into more shorts here. So there's the re-entries, right? So there's the entries at the beginning of London. There's the re-entries still during the London session. And then we get into New York here, right? And I went off my plan where I should not have taken this OB here. I did, but I shouldn't have. I went off my plan here because I was treating this as minor inducement, but I should only stick to the inducements that are pretty well known, which are these 3 over here, right? So my mistake for flipping these buys into shorts, but originally, yes, I did catch these buys down here at the beginning of New York, and I'll explain these now. So a lot of momentum kicked in here, right? As we can see with these candles right here. When a lot of momentum kicks in, right? Generally, when momentum comes and hits inducement or hits support or something like that, right? It generally means there's manipulation coming into these inducements. So here's a massive amount of manipulation coming in the market, right? Here it's starting to chop, right? What do we see? A stop hunt of that chop, right? That little grab right there. And what do we produce? A pin bar, right? And generally a pin bar is what? Rejection, right? Anytime we're seeing, remember I shown this candle before. This is a manipulation candle, right? Remember I always talk about how the wick is almost 50% of the body. The body is also 50% of the whole thing, right? Like that's important. It tells me that there's manipulation coming in there. Now I understand that wicks have closures in them, right? But what people don't understand, and I think it's an underlooked concept, is that price is behavioral, right? There's a reason why I'm looking at wick rejection or yeah, so there's a reason why I'm looking at wick rejection and these types of imbalances or candlestick formations. And that's because the algorithm, the computers, the high frequency trading thing, they don't see what the candles look like, right? You have to be able to see behavior, right? It's just like saying like, can AI read emotion or be emotional, right? They really can't in this sense. Only we can, which is why I read each individual candlestick because they all tell a story. Um, anyways, let's come back into how I caught these buys right here, right? So we can clearly see that we could have hopped into sells here, maybe hit SL one time, right? Right here, right? This would have been SL, but if we were patient, waited for it to mitigate something from the past first, we would have hit, then had our re-entries right here, right? It's really all depends on how you want to read price. And then we had these re-entries here. And then how did I get this? Well, we had the morning star pattern and the engulfment of this pin bar, right? So as soon as we came back, tapped in, I started buying, right? Now you guys probably saw me keep buying it, right? Well, I kept buying it because this candle engulfed this candle and I waited for the retracement down, bought it again. Then I waited for this candle to come and sweep this candle and I bought it again, right? And I ended up closing the majority of my position, or really the whole thing right here, and flipped everything into sells. That was a complete mistake. I shouldn't have done that. I should have held the buys, right? The reason why I should have held the buys, right? If all of SMC is looking here, and we know that there are re-entries right here, right? This is where more people got in the market. If the market knows that, right? We leave a trace too, right? So think about where people have entered in the past, for example, like here, and or are entering here. The market's coming up here to sweep all these people out, right? It's not always about structure. It's just understanding the algorithm. That's why I say think like an algorithm. And then right here is where the sweep of all these orders happened. So what occurs after that? Right, well, you actually could have entered as soon as the swept occurred right here and hopped into more shorts again, right? Because there's your bearish engulfment, right? Retest all the way into the wicks right here to grab some crazy re-entries. Now, all of SMC, right, saw this, right? Normal SMC traders, right, saw the breakout down here. We came up, retested, and then entered here. This is a perfectly fine setup too, right? And then I entered more right here too. So let me explain these entries as well, right? So this was based off of the 15-minute, right? Like I said, we swept all of these orders here, right? And also we had what? A nice momentum shift, right? So here's price moving up, right? We had a nice BOS momentum shift during the intraday, right? We came up, swept, right? Daily cycles pointing everything to go short, right? Just everything structurally makes sense for all this to go short, right? So considering that we also have, these inducement lows right here, right? This little sweep right here becomes a liquidity target as well, right? And just like I've said before, even though this is rejection, right? Short term it popped up, but this is still a BOS because candle wicks are still what on the lower time frames, candle closures, right? So this is still a BOS, right? Which still caused this to continue lower. Now, what was my refinement in here? It's the same as what I've been showing with gold, right? And it's this little M, right? I always talk about this M. Well, this M creates something called a flip zone, right? So this right here is my flip zone. How did I get my flip zone? I went into the 1 minute, right? I looked at it for a little bit. I saw this gray candle was the last gray candle to enter. This black candle was the first to come in and form this M, right? So I just took the high of this candle to the low of here. It's not perfect right now. If I were to draw it out perfect, this would be it. This is how I would start off the drawing, right? I was just taking the upper wicks here, right? The upper wicks to the lower wick here, right? Because it's some other higher time frame OB basically. And that's what allowed me to get my smaller refinement here to hit shorts, right? Usually after we hit a flip zone, we come to an extreme like here, right? There's a lot of times where it will take a nice hefty bounce off of it. The reason why I didn't is because of this reason right over here. This is how I got into these shorts right here, right? What happened was price came down. We had like an intraday BOS right here, right? And then price on the 1 minute came and swept all of this. This is very confusing to explain to somebody, this type of setup right here, because it just comes with intuition and practice. I just see that this came and broke all this right here and formed more liquidity, right? Within this leg, right? That has not yet broken this higher time frame leg yet. Now, considering all that, understanding that this is one of the main liquidity buildups, I had to wait for it to get swept and then do what? Once it got swept, I waited for this to form an OB, right? Of course, I'd want this refinement right here. However, the market wasn't nice enough for me. It took this candle too. Why was this one okay as well? It's still left an imbalance, right? So it actually almost becomes a part of what this is on up top, right? This whole thing becomes the OB as which I drew in here, right? So you all saw me, I think, well, I think Raymond as well got some shorts right here. Raymond started getting in here. I started getting in a little bit later than Raymond right here, right? And then I hit these right here, which were even nicer because of the RR, right? Because I had a tighter RR. And now, like I said, I was aiming for this all the way down here, and I pulled majority of my profit right here. I'm done trading for the day now. That's why this breakdown came out a little later, is because price today was moving beautifully for EU. Definitely a really great day. Like I said, I normally never trade post 11, but structure, right, was just super clean today, right? As you can see, it was just moving very nicely, very fluid. And comparatively to the yesterday, where it's just this bullshit over here, right? This is terrible to trade. Whereas this is just gorgeous and fluid and very nice, right? So that's why I kept trading a little past hours today. And I didn't make a breakdown as soon as I finished, but you can see all the opportunity that there is within price. Obviously, there is more like you've seen, like you can take the internal liquidity points and trade all of them, similar to how I originally tried to take shorts here with these minor inducements because all of this was liquidity here as well. But those didn't end up working. It's all about building your narrative, because a lot of these setups are redundant and the same, but they act differently in very many just different situations. So, let me see what else I can explain. Oh, one thing I missed to put in, right, for GU. People were asking about GU, and people were trying to short right here. I remember this, right? Let me explain GU real quick. First of all, we had this trend line, right, that all you guys I think missed out on, because what this trend line told me, right, higher time frame, was that once we hunted the trend line, we were going to come right back up, right? Also, I think the lows, right, the lows were really supposed to be down here. This is where we wicked yesterday, right? So this is not previous day lows, but it's the closing wick, which is still crazy. Usually that closing wick takes everybody out of orders, and it looks like it took anyone who was buying here out of their orders. But yeah, we never came to fully, first of all, hit this inducement. What we did induce was this trend line. And I told people like that what a trend line's good for is, longer term things. When it's more longer term, we want to see, that build up on a trend and then that false break into what makes the higher highs. And that's exactly what happened here. Could have you entered? Yes, you could have. This is a morning star pattern here. Oh God, I didn't mean to do that or that. There was no 10-minute entry. It looks like there was an entry right here. I can just tell by the candlestick formation. So if I go into the 1 minute, right, I need to look at structure, right? Yeah, it looks like this has more fractality to it and comes and breaks all the way up here. This is where we initially broke, right? Price runs up, comes and sweeps this. It looks like the only possible area, one of the possible areas we could have had was there. This as a flip zone, right? You can use previous structure points as a flip zone sometimes. Let me see if there was a 5-minute entry. I don't like the way the 1 minute looks. All right, so I guess you could have done a 5-minute entry rather instead, right? Here's that nice rejection candle. Here's this. Then here's the bullish engulfing. You could have taken the lows here up to here. And as soon as this as your refinement, right? Your refinement could have been what? The lows of this candle, right? So you could have had entries as soon as we tapped into this box here or here, right? Considering that we induced the trend line, breakout sellers are going short, right? Price runs up. This would have been a stop out during New York. I remember this, where this was all internal liquidity to me, right? Because we didn't break previous day highs, right? This was all external, right? Can you see how this was external, how we had a trend line and this stop hunting? Like I said, when we're stop hunting external liquidity, we do the opposite. Well, how do we know this is external? If we come out, right, we can see that price is running along this trend line. We know this is all external. And we know price is all external up here as well. Those are previous day highs, right? And did we mitigate something from the past in order for this to drop? Yes, we did. Right. So here's that initial break, right? Here's the candle that broke it. The only problem with this setup is that this candle didn't do what? It didn't sweep anything. So you're already taking a chance at a lesser probable buy here, right? But nonetheless, it was still a fine entry. You could have entered this if you truly wanted to, right? Now we come up, right? We swept previous day highs. We had the opportunity to go short. I did try and go short here again, right? I stopped out, which was fine, 1% loss, 1% loss, right? I'm generally a very aggressive trader. I'm okay with that. But then we came up one more time to seek shorts again, right? And I actually got these all on the 5 minute. As soon as we had this evening star right here, I was able to hop into shorts right here, right? And this was perfect because we mitigated something directly from the past, right? There were re-entry opportunities along the way. I didn't go for them. There was really no need at that point. But what can we expect at this point? I'm not entirely sure yet, to be honest. What do we do know though? We know we need to catalyze a move by doing what? Sweeping here or sweeping here, right? It does just look like that we just did what? We swept these lows just now too, but it looks like this is just going to be retail wise settling below this and continue. Um, let's take a look at one more. Gold, right? So I'm still waiting for gold to come into here, right? I also made a mistake on this today. Where did I mess up? Somewhere around here, I think. I think this is where I started entering around this wick here, right? I started doing that primarily because I was looking for these to continue into my short positions, right? Because I think, pretty sure these are gonna hit short here because of this flip zone over here, right? We could ride all the way down to the bottom here and buy, but I'm not 100% about it. I need to see how he reacts, get some more confirmation up here. But like I said, also based on this 4 hour, what do we have? Nice OB, nice run up, right? This looks like it's gonna run up into here and then fall. So I'll keep an eye on gold. I really want to focus on it this week. Not to mention the EQD, right? The amount of money that's just laying right here, right? Follow the money, right? All the money is kind of sitting right here. We are very likely to probably take this out. Good chance of before we hit our area up here, right? We may need to come swoop in, take this money, right? And then perhaps come into here and then reverse. But we'll see how that goes. I hope this helps. But yeah, I'll see you in the next breakdown.